Tuesdays. All right, and we're live. Good morning and welcome to Tax Talk Tuesdays. I'm your host, Chastity Grady. On Tuesdays, we will be talking about all things taxes, business, and finances. Okay, so join me every Tuesday 7 a.m. Central Standard Time. So as we're getting started, I'm just going to share this group or share this live to a couple groups, and we will be on our way. All right, I wish there was a better way to do this. All right, so welcome to Tax Talk Tuesday. So on today, we are going to talk about understanding small business taxes. Okay, that's what we're talking about today. Understanding small business taxes, and the reason why we're going to talk about this particular topic today for our first Tax Talk Tuesday is because this is a most frequently asked question in regards to filing business taxes and paying business taxes and what's this personal tax? I thought I have a business tax because I'm operating a business, and I want to clear this up for you. I want to clear this up for you once and for all so that you can have clarity and understand how to operate your business the correct way and how to go about taxes the correct way. Okay, so if you're new to me, welcome. I am Chastity Grady. I am the owner of Grady Tax Plus, and at Grady Tax Plus, our number one goal is to make sure that we are keeping the IRS out of your pockets so that you can live a better life. And one way we are doing that is by providing you with the education and tools that you need in order to make better decisions. All right, so understanding small business taxes. So to set this up, I want to talk to you about four types of business structures that people may have, and then I'm going to break that down into what that looks like from a tax perspective. Okay, so in business, if you have a business, if you're doing your business on the side, you don't yet have a LLC or a PLLC, maybe you're just an independent contractor, maybe you're just a side hustler, whatever you want to call yourself. Okay, you're not either taking your business seriously or whatever, you will be considered a sole proprietor. Okay, so the IRS consider you a sole proprietor. You're the sole person who's running this business. You're the sole owner. They consider you a sole proprietor even if you do not consider yourself to be one. So I always tell people who are operating businesses, who are independent contractors, who are side hustlers, maybe you're doing Uber, DoorDash on the side or whatever that may be, or some other type of work on the side. The IRS considers this to be a sole proprietor, okay? And as a sole proprietor, your business, the income that you're generating from that business activity, so to speak, is filed with your personal tax return, okay? There's no distinguishment between you and the business activity, okay? So the IRS says that because you are the sole proprietor, because you are engaging in a business activity, the IRS says that your business activity, your income and expenses, it goes onto a Schedule C, okay? I'm gonna put it in the chat for you on Facebook what a Schedule C looks like so you can see it. All right. Oh, I can't do that from here. One second. But I'm gonna put it on in the Facebook chat or the comment section so that you can click on that and see what does a Schedule C looks like. And this is filed with your personal tax return, okay? This is filed with your personal tax return. All right. So a lot of times people are like, but it's a business activity. Yeah, I understand that. But the IRS considers you to be a sole proprietor, meaning there's no separation between having a business tax return, so to speak, and then your personal tax return. This Schedule C is a supplemental form. You can consider it a supplemental form to your personal tax return. As you can see, if you click on that link, or if you're on TikTok, use another device to research Schedule C. And when you look that up, at the very top, you will see profit or loss from business, And in parentheses, it says sole proprietorship. Okay. So when you think about, okay, oh, I found, I did this business activity. Where does it go? It goes on a Schedule C. All right. This gets filed with your personal tax return, which makes this be a personal tax. Okay. And remember, I'm going to be breaking this all the way down. So stay with me. All right. And share this live with somebody who needs to understand small business taxes. Okay. This is very important. And this is going to help you reduce some of the confusion that you may have regarding it. All right. So Schedule C. And then you may think, well, I'm not a side hustler. I have an LLC. I have a PLLC. I have my, I'm operating a business because, I have my LLC, I have my PLLC. You will still be considered a sole proprietorship. The IRS doesn't make any distinctions between legal entities. So although you have, I like to say, legalized your business by making it a LLC or PLLC so that you can have the legal protection, because that's the only thing that LLC, that PLLC would provide, is legal protection. All right. So it's providing you the legal protection, but that has nothing to do with taxes. Legality and taxes are not the same. Okay. And I think that's maybe that's where there's a disconnect, because we might think, oh, because we legalized our business, we caused the separation between myself and the business from a legal standpoint, that also means that we created a barrier between myself and the business when it comes to taxes. And the IRS says, actually, you did not. Okay. Legalizing your business and taxes are not the same thing. Okay. And tax statuses are not the same. So although you have legalized it, you made it an LLC, you made it a PLLC, it is still considered a sole proprietorship in the eyes of the IRS, which means that you would use the same form, a Schedule C. Okay. Even if you look on that form, you can see where you can put your business name on it. You will still use that profit or loss for business. And like I said, in parentheses, it says sole proprietorship. So it's the same thing, which makes this be a personal tax. So when I hear people say, oh, I'm an LLC, I'm a PLLC, I got to pay my business taxes, there's no business tax. The Schedule C form is filed with your personal tax return, which makes this be a personal tax. So when you go to make your estimated tax payments, this is a personal tax that you're making underneath your Social Security number. This is important. This is the one thing that people get confused about. A Schedule C, if you file your business on a Schedule C, you're a sole proprietor, or you have an LLC, you have a PLLC, your business activity, your income and expenses is getting filed on a Schedule C. Is getting filed on a Schedule C, which is a personal tax. Anything that's attached to your 1040 is a personal tax. So again, when it's time to file, or when it's time to pay rather, your quarterly taxes, your estimated tax payments, that goes directly on your personal taxes, because you're paying federal taxes, you're paying Social Security and Medicare taxes, and those three are personal taxes. All right. So let's make sure we have that particular part clear. All right. If you're a sole proprietor, meaning you have a DBA, I didn't even mention a DBA. Maybe you don't have a DBA, you're just operating as your under your Social Security number, or you have an LLC or a PLLC. This will be filed on a Schedule C. Okay, that Schedule C is attached to your personal tax return, making that be a personal tax. Okay, so there's no business tax for an LLC. There's no business tax that you pay or file separately for a LLC, PLLC, or a sole proprietor. All right, so a step up from that, let's say that you are in business with multiple people. Maybe you have now legalized it. Maybe y'all are just doing something together. You're Jane Doe and John Doe, and I don't know, Zane Doe. Okay, all of those. Not related, or you can be. And you have some business activity that you're doing together. You have now legalized it. That's considered being a partnership. Okay. And then let's say you did legalize it. Let's say you do have an LLC, you do have a PLLC for this partnership. That's a partnership. All right. Now, the difference between these two, having that Schedule C in the partnership is that with the partnership, you actually have to put that on a separate tax return called Form 1065. All right. We're going to school today. We're going to school today. So, Form 1065, I'm putting this in the chat for Facebook. All right. So, Form 1065. I can never see comments. All right. So, Form 1065. And on that Form 1065, if you look at it, it's kind of similar to the Schedule C. You have the sections where you put your income, you have the section where you put your expenses, and then you'll see where your net profit is, right? But there's really no section on here about business taxes. Now, within the partnership, there are some things that could qualify for paying taxes on. And the IRS says see instructions on that, and that's because it's very uncommon for most people. And so typically, whenever you file a business tax return for a 1065, which is a partnership, you just have your income and expenses, and there's no taxes that's owed. And that income that you made from the partnership, it gets divvied up, divided by however many partners, or whatever your partners' percentages are, and it gets put with your personal tax return on a Schedule E. So I'm being very formal with you all because in business, you need to know what your schedules are. You need to know what is going on at the tax level, at the business level when it comes to business, okay? I want you to walk away being educated, knowing that you can know these forms, you can say these forms because you need to know them, right? You need to know what your business is being filed on. You need to know what kind of taxes you're paying. These are need to know, okay? These are not exclusions that you exclude from yourself, like, oh, I don't need to know that. You absolutely need to know this information. So as a partnership, your income, the net profit, it gets divided by however many partners and their percentages. And that income goes onto the personal tax return on a Schedule E. Okay. And when you look at that Schedule E, that is called a supplemental form. Okay. And because it is on your personal tax return, it now makes it a what? A personal tax. There's no business tax. There's no business tax. The income that the partnership made, that you made between your other partners, that gets onto your personal tax return. That income, your portion of the income goes on your personal tax return, which is then taxed at your personal level. So whatever your personal tax bracket is, that's the taxes that you would pay based off of that. So again, there's still no separate business taxes. The partnership itself doesn't pay a tax on that net profit. It gets divided among the members, among the partners, and it gets paid with your each individual's personal tax. So one person might pay 37% off of that. One person might pay only 12%. One person might pay 22% in taxes, depending on your own tax brackets. Okay, it's respective to your tax bracket with your personal taxes. So again, still no business tax. So when you think about, okay, you're paying your quarterly taxes, you're paying your estimated taxes, that is still with your Social Security number. Okay? That is still with your Social Security number, which means it's a personal tax. So there's no business tax. And I'm going to put the Schedule E because we're going to need this again. I'm going to put the Schedule E in the chat, in the comments for Facebook. All right. So we talked about if you are a sole proprietor. We talked about if you have the LLC, if you actually legalize yourself, that's one type of schedule on the Schedule C. And then we talked about, well, if it's multiple of you, whether you legalize it or not, that's a partnership. Still a personal tax, okay, that gets passed on to the Schedule E. That Schedule E is on a personal tax return, making it a personal tax. Now, let's talk about I was going to say the Big Bang Theory. Let's talk about the most popular entity that people love to talk about, which is the S Corp. Okay. Oh, if I become an S Corp, then I can separate my business taxes. If I become an S Corp, I can do all of these. Right. Mm-hmm. So we talked about if you're a sole proprietor. Let's talk about if you were an LLC, PLLC. Remember, you're still a Schedule C. But let's say you wanted to implement a tax strategy. You wanted to implement a tax strategy that says, I want to separate the business from my personal, right? I want to use a tax strategy to allow me to now put myself on a salary so I can make that be tax deductible on its own tax return. The way to do that is on a scale, is on a S corp tax return, which is a 1120S. So when you look at a 1120S, form 1120S, when you look at a form 1120S, it's similar to the other ones we looked at. It's similar to a Schedule C almost. It's similar to a partnership where you have the income sections, you have the deduction sections, which is your expenses. And then if you look at the tax and the tax payments, typically none of those types apply to most business owners. So you have things on here about like fuel taxes, excess, let me see, fuel taxes. And then if you did have any other special type of taxes, recapture taxes, things that really don't apply to most people. And so you'll have that net income, and that net income, it doesn't get taxed on your S corp tax return. That income, like the partnership, it flows over to your personal tax return on the Schedule E. Wait, what? So you mean to tell me when I filed my S corp tax return, that net profit, it just goes to my personal tax return, and then I pay personal taxes on it? And that is correct. There's no business tax. There's no estimated business tax. Okay, unless you have one of these special types of taxes that mostly don't apply to business owners that I typically work with, which is service-based business owners like social workers, therapists, if you're a content creator, consultants, travel agents, those type of businesses or similar, you don't have these other types of taxes. So when you go and file your S corp tax return, you have your income, you have your minus your expenses. That net profit, so if you're left with $50,000, that gets carried over to your personal tax return. So $50,000 worth of income is getting passed on to your personal tax return, and that is a personal tax. So again, there's no business tax. There's no business taxes for your net profit on your S corp tax return. That goes onto your personal taxes. When you get that K1, which is what the S corp will issue out like a 1099 almost, and the Schedule K1 says that Jane Doe needs to report $50,000 onto her personal tax return. And that $50,000 will be taxed personally. So whatever your tax bracket is, if it's 37%, 22%, 12%, whatever it is, that's what tax bracket that tax will be taxed on. So again, no business taxes. No business taxes for the S corp. And a lot of people get confused. They're like, "Well, I'm paying taxes from my paycheck, but that's payroll." That's a separate thing. It's not taxing you on the net profit, which you have left over. It's only taxing you on the income that you pay yourself. What about the overage? What about what you're not paying yourself? What's left over? That gets carried over to your personal tax return as a personal tax. So when you're paying estimated tax payments, that's a personal estimated tax payment on your with your social security number. Still, no business tax. Now you have the option, just like with when we had talked about with the LLC and the PLLC, if you're a single member, and if you are a partnership, and if it's multiple members, you also have the option to where you can turn that partnership into an S corp, okay, to help you save on some of those Social Security and Medicare taxes. But again, that still goes back onto your personal tax return. That still gets passed on to your personal tax return. So what is the business tax? Then why am I in business if I don't have a true business tax? What's the business tax, right? And people don't realize that the only entity structure that truly has a business tax is a C corporation. A C corporation, not an S corporation, not a partnership, not your LLC, not your PLLC. The only business structure, tax structure that has a true business tax that does not get passed anywhere. It does not get passed onto your personal return like the others do. It's a C corporation. So I want to show you, I can't show you, I'm looking at it, but you can pull up those links I'll put in the chat. I'm going to put 1120 in here for a C Corp. Okay. C Corp tax return. And here's the main difference. When we looked at the partnership tax return, when we looked at the S Corp tax return, we didn't see anything about taxable income. We didn't see anything about taxable income, right? We didn't see anything about taxable income. We have our ordinary business income, and that gets passed on to you on your personal tax return. But if you look at that C Corp, the C Corp actually has, after your income and expenses, it has what's the taxable income. What is this C Corp about to be taxed on? And then it has other taxes as well, like the other ones. That taxable income, that's what's actually being taxed. And it's getting taxed at the current rate is 21%. So it doesn't go with the win. And by the win, meaning it doesn't go with what your personal tax bracket is or anything like that. It's not respective to that. So if your net income is $500, you're paying 21% on that. If your net income is $500,000, you're paying 21%. A flat tax of 21%. And then your personal return has no information from your C Corp. It doesn't have the net income that's being taxed on there. It doesn't give you any supplemental information to put. The only thing that your personal return will have is your W-2. What you were directly paid, or if you had any dividends paid out on the 1099 DIV. That's it. So the C Corp, that's the only business that actually can pay quarterly taxes for a business tax. So moving forward, the language that you use is that you no longer have a business tax. You're not paying business taxes. You're paying personal taxes. Social Security, Medicare, federal taxes, federal income tax. That is personal taxes. Yes, your business activity adds to what you pay personally. And yes, you can factor in how much of my business income contributed to the extra taxes. You can do that. But as far as your business paying a tax directly to the IRS for just the business, that does not exist unless you are a C corporation. When I say this is this is what's going to help you change your mind regarding how you're looking at your business, because many of you you're operating in confusion, and when you just need the clarity, and the clarity was given to you on today. When you pay estimated tax payments, if you are not a C Corp, it's personal. It's paid with your Social Security number. Okay? Moving forward, it's a personal tax. You do not pay a business tax if you are not a C corporation. Everything is going on to your personal taxes, okay? Which gets filed with your personal tax return. Now, this is something that I teach a portion of how do I calculate? What am I putting into my personal taxes, given that I have my business activity? What am I supposed to pay? That's something that I do teach you strategically within my 90-day bookkeeping bootcamp. Within the 90-day bookkeeping bootcamp, we have a class specifically regarding taxes and understanding your personal tax obligations and how to calculate that so that you're never behind on taxes. so that you are never behind on your personal taxes, so that you can live in freedom during the year, knowing that, okay, when it's time to file next year, I've already accounted for what taxes I need to pay for this year, right? And not only that, a missing piece of that, what I find is that a lot of business owners, they are unable to account for the business activity that you're doing when it comes to your personal taxes, because you're paying the way you're paying yourself, right? Understanding paying yourself. And when you master understanding paying yourself, how much to pay yourself, so you don't bankrupt the business, so that you can have income, um, so that you can have money left over to pay taxes, that will help you not get behind with the IRS. Many people who are in the structures of S corp, partnership, and if you just have your LLC or your PLLC, you're not taxed as a S corp. You can find yourself being very behind on taxes very quickly if you are not accounting for this aspect. Okay, and that's the most important part, because you went into business to make money, and you wanted to make money for yourself, and you've been paying yourself a lot of that money, and then at the end of the year there's nothing to show for it. Our goal is, when you have a business, your business is an asset. Your business is an asset. And at the end of the year, if you don't have anything to show for it, then it's kind of like you bought a house, and if you were to sell a house, you're going to get less than what you pay for it. And nobody wants that. Nobody wants to buy a house and sell it, and you're in the negative, right? That's not how your business should look. It should not look that way. Well, oftentimes businesses do. And that's why when I created the Fire Your Boss Friday segment, for those of you who are participating in that, that's why I created that, because I want you to visually see how your business should look before you hit that button. And by hitting that button, meaning put in that resignation letter. Right. Because you don't want to put in a resignation letter and your business is cash poor. Right. You don't want to put in a resignation letter. You don't want to go full time in business if you haven't gone full time yet, and your business is cash poor. That's why the 90-day bookkeeping boot camp exists, to teach you how to not be cash poor, to teach you how to actually look like you made the money that you made, to teach you how to appropriately pay yourself, so that you don't bankrupt your business, so that your business don't go broke, so that you don't go from deposit to deposit, waiting on that next deposit to hit in order to have money, right? Accounting is the language of business. Accounting is the language of business, which means that if you are in business, you should know the language of accounting. But a lot of times we're running away from that, because we're like, well, that's not my lane. I didn't get into business to know the numbers. You absolutely did. Because you need to learn, if you went into business to make some money, you got to be in business to keep it as well, to manage it, to know what to do with it, if you need to invest, if you need to save. What if you want to go, like for me, I was away for 2 weeks from my home. For 17 days I was away, and I was away in peace. I barely worked. I had my assistant, especially last week because I was in Florida. My assistant was running the show. The week before that, I had a modified schedule because I was in Vegas. I had a couple things I needed to do, and then I was in Dallas for a conference. For 2 weeks, I maybe clocked in 6 hours. And the way my business is set up, the way I structured up my pay, is that if I personally don't do the work, then I don't personally get that money. If I don't put in those hours personally, I don't get that money. But the way I set my business up to not be cash poor, to have a PTO fund to fund me if I need to take off, if I need to be gone for 17 days, I can do that in peace. And that's how your business should be. Your business should be set up to where, if you want to be gone, if you want to take an impromptu vacation, or if you want to step away to do other things, that you can still be able to pay yourself personally. You can still pay yourself personally without having stress, without worrying about where the money's going to come from. If I don't see a client or if I don't make money in the business, then how am I going to get paid to sit at home and do nothing or to go on vacation, right? That's what, when you get into that 90-day bookkeeping boot camp, that's what that does for you. It's able to help you set your business up to not be cash poor anymore, so that you can operate your business the way that you should, so that you can get that language, because you need accounting language. I gave you some of it today when we talked about the schedules, when we talked about some taxes. I gave you some of it today. But we also need to know about the language when it comes to managing our money, when we're assigning our dollars, right? When we looked at those schedules, all of those expenses, those belong in a certain category. How do we put those there? Or what systems and tools do we use to put them there? Right? All of that is things that you must know while operating your business. If you want to have the ultimate financial success, I'll say that. If you want to have the ultimate financial success, if you want to actually look like your business is doing what it's supposed to do, if you want to actually live in time freedom, live in financial freedom, I'll say that. If you actually want this for yourself and you don't want to go from deposit to deposit, you don't want to be itching and scratching. I'm thinking about this Dave Chappelle meme where he has like the white lips and he's like scratching like he waiting on his next fix. You don't want to be looking like you waiting for your next fix in your business because it wasn't set up right. I believe that every business owner, if you're in business, you went in business to make money, you should be able to use your business as the asset that it is. You should be able to have something to show for it at the end of the year and not be stressed. I like to say, you see some of the business owners that you look up to, you aspire to be, or you're inspired by. You see how they're living their life, like their business. It's just fun. It's just taking them to all kinds of places that you wish you can go. And how is their business being able to do that and yours can't? It actually can. And you don't even have to have the same level of income. You don't even have to have the same level of resources that they can. You just need to use the tools and the strategies. You just need to use the tools and the strategies, because believe it or not, you can have as much money as them, but without the tools and strategies, you can still be cash poor in your business. You can still be cash poor. You can still go bankrupt in your business. You can still be broke in your business if you have not yet used the tools to pay yourself the right way, understanding the tax piece of it so that you don't owe the IRS so much money and not have it to pay. And then your business savings, the business savings is often neglected. Your business savings should have the most money, I feel like. Every year that you're in business, I like to give examples. Let's say you made $50,000 every year in business. I'll give that an example. Well, every year that business should have $5,000. So if you've been in business for 5 years, making $50,000 a year, then you should have $25,000 just sitting in the bank. You should have $25,000 just sitting in the bank. And when you hit your 100K, then you should have 35,000. And every year that you hit 100K in your business, that $10,000 is being added, accumulation, right? And when I tell people that, they're like, "Wait, what? Like, how does that happen? How do you do that?" With the tools and strategies that I show you. So if you are somebody who made $50,000, $100,000, and you don't have at least 10% of that saved in your business right now. When I say saved, it's not a part of your tax account. It's not a part of the money you're going to use to pay taxes. No, it has nothing to do with that. So if you've been in business from 3 to 5 years and you made 50 to 100,000, 200,000, whatever it was, 10% of each of those years should be sitting in your savings account right now. And if you don't have that, I want you to click the link that I put in the chat, in the comments, if you're on Facebook, to join the 90-day bookkeeping bootcamp. Okay. I need you to not go another day. I need you to not go another year being cash poor in your business, being behind on taxes, or being afraid of potential tax liability. I want you to go moving forward. I want you to move forward knowing that you can pay yourself the right way. You can confidently withdraw the money from your bank account without having to put it back in because now the business needs it again. You should be able to pay yourself free and clear without having to worry about putting money back into the business because, oh, the business now needs some of that money back because the business doesn't have anything. That's what I provide for you in that 90-day bookkeeping boot camp. I give you the clarity that you need, the confidence that you need. A lot of times, I'll be honest, many of you are not showing up the way you should show up in your business because you lack the confidence when it comes to your money. It's the truth. You lack the confidence. And a lot of times you don't realize it that sometimes the imposter syndrome, the way it sits in, because it sits in all kinds of ways. Imposter syndrome sits in if you don't have your business back end right, if you don't have your schedule and stuff right, if you start getting overwhelmed because when somebody book you, you don't have everything in place to execute afterwards. That imposter syndrome kicks in, and it really kicks in when it comes to the tax situation, when it comes to your finances, when you don't realize that the way you should pay yourself matters, and how you pay yourself and how much you pay yourself matters. The imposter syndrome, it kicks in, and it prevents you from showing up and being your true self in business. It prevents you from showing up online, being confident. It prevents you from being bold in the marketplace. It prevents you from doing that. And even if you continue to show up, there's something inside of you, the anxiety kicks in. All of that stuff kicks in. But what I like to say is that when you know that your business is tight and right, I don't know like why I like that analogy. But when you know your business is tight and right, when your business finances are organized, when you know you're not going to be behind on taxes, when you know you can pay yourself, when you know you can go on vacation, you can take a day off, that you're not going to stress if XYZ client doesn't show up today. When you know that, listen, the amount of confidence that gives you, the amount of boldness, and I'm going to be obedient because what came to mind when I said that was a scripture was that when we're bold, when we're confident that God rewards us, the amount of reward that you would get for being bold, for being confident in your business, when you don't have to shrink back, when you don't have to lower your standards. Imagine a life where in your business that you can be bold, you can be who you have been called to be, you can show up how you want to show up. Imagine how your business will accelerate having that confidence. Imagine how much more you will get done in your business having that confidence. Imagine how far your business could go with that confidence. Okay, so click the link in the comments. Join the 90-day bookkeeping bootcamp. We're enrolling for August right now. Our August classes will be starting soon. Right now we're doing one-on-one, so this will be me and you. And the reason why it's going to be me and you, because your finances are very intimate. We get right into your finances. Other people don't need to see that information, right? There are some things that we can do in group settings that's general to everybody. But when it comes to paying yourself, understanding your taxes, understanding how to manage and build your business savings, that's personal. And we're going to do that up close and personal, one-on-one via Zoom. And you schedule these at your own leisure, right? Whatever fits in within your schedule for the month, and that's in alignment with my calendar, then that's when we would meet. So we'll meet twice in August, we'll meet twice in September, and twice in October. All right. And those are 1-hour meetings. And after that 90 days, the way you show up in your business is going to be different. The way you manage and view money is going to be different. And all I want to know is where you're going to go on your next vacation. That's the only thing I want to know. Where are you going on your next vacation as a result of doing a 90-day bookkeeping boot camp, viewing your finances differently, managing them differently, being able to successfully pay yourself without giving the money back to your business? I just want to know where you're going on vacation next. Okay. What are you going to use your PTO fund on? Okay. Where is that money going to? That's the only thing I want to know. Okay. So I hope this live helped you in understanding small business taxes and understanding that only one business type, only one tax entity type has a business tax, which is a C corporation. And if you're not a C corporation, it's all personal. The way you file the tax return might look different, but the way you pay is the same. The way you file the tax return might look different, whether you're a partnership that goes on 1065, if you're an S Corp that goes on 1120S, if you're just an LLC or a sole proprietor, DBA, that goes with the Schedule C, so with your personal return. And again, those 1065s, 1120Ss for the S Corp and the partnership, that still goes on your personal return on the Schedule E, that net income, which all leads to it all being a personal tax. So just remember, estimated tax payments, if you're not a C Corp, that is a personal tax. So when you go to pay your estimated tax payments, it's under your Social Security number. That is correct. That is the right way to do it, underneath your Social Security number. If you're a C Corp, that is the only business entity structure that people are afraid of for whatever reason, but it's a great structure to have. People blurt out their mouths about being double taxed and don't even understand what that even means. But I personally feel like the C Corp structure, although administratively intense, is probably the best tax entity to have out there, I believe. That's just me. But people all they talk about is S Corp, so that's what people flock to. I get it. But the S Corp will have you paying more money in taxes when you start making a certain amount of money. You'll pay, your tax bracket goes up to 37% because it's a personal tax. So whatever the personal tax brackets are, that's what that S Corp money is going to be taxed on. It goes all the way up to 37%. In a C Corp, what I say, flat tax, 21%. So if your net profit is $500,000, it's only getting taxed at 21%. But if that $500,000 is going on that personal tax return, on that Schedule E as a result of that 1120S, you're getting taxed at 37%. That's way more money. But people, whatever social media tell y'all to do, I'm just giving you the facts. So I hope y'all enjoyed this live. Thank you for tuning in for Tax Talk Tuesdays. We will be back next Tuesday, August the 13th, I believe. No, August the 12th. Next Tuesday, August the 12th at 7 a.m. Central Standard Time. So set your alarms, set your clocks, wake up with me. Join me at 7 a.m. next Tuesday for our Tax Talk Tuesday. And then also on Fridays, we are talking about firing your boss. So Fire Your Boss Fridays. That's what we do on Fridays. We gather. I give you the tools and strategies that you need in order to be successful at firing your boss for good without looking back. All right. A lot of times in entrepreneurship, when you get into business and you're still working full time, you want to one day fire your boss, but you may be afraid, you may be scared because you don't know what's going to happen next. And every week, every Friday, we're giving you the tools that you need. So I have a Facebook group for that. It's called Fire Your Boss Fridays. So make sure you join that group. There is a homework assignment. I'm going to put that link in the chat for you all for the Facebook group for Fire Your Boss Fridays. Give me 1 second. Also, I didn't give a shout out to my other Facebook group, which is Social Workers and Therapists with Tax Questions. I will be going into that group just shortly after this live to answer some direct questions. Fire Your Boss Fridays. So if you're a social worker or therapist in business, I have a specific group for you, okay? And I'll also put that in the chat as well for you to have. Why do I have a specific group for social workers and therapists? Because my background is as a licensed clinical social worker, and I know that my assignment is to serve social workers and therapists who are in business, because that's the community that I come from. And I understand my community, and I am the face for them. Okay, I am the face for them. I'm the number one go-to person specifically for them. So social workers and therapists with tax questions, Facebook group, I'm putting it in the chat. And then I'm also going to go live briefly in that specific group. So join Fire Your Boss Fridays. I put that group in the chat. Okay, I put that Facebook group in the chat. We have a homework assignment that's due Thursday night. Oh, darn it. We have a homework assignment that is due Thursday night. Okay, so if you are somebody who wants to fire your boss for good, your homework was to get a journal and write the first writing prompt. Okay, why do you want to fire your boss? This is important. I don't want to go into much detail about it, but there is a live in the group talking about that homework assignment. So if you do want to fire your boss for good one day without looking back, right? Part of the 90-day bookkeeping bootcamp helps you with that, but there's other strategies that I'm giving in this particular group for free to help you all. Because I believe that if you want to fire your boss for good, you might as well do it the right way. You might as well do it the right way. Thank you, Christina. She said I look amazing. Thank you, girl. You might as well do it the right way, right? Without looking back, without, feeling shame or anything. You can fire your boss with confidence, knowing that, hey, you did all that you needed to do beforehand. You prepared for it beforehand, and you just ready to chunk up the deuces. So that's what we'll be covering every Friday in that group. All right. So again, thank you for joining Tax Talk Tuesdays. Hashtag replay. If you're catching a replay, share this video with somebody who needed to understand small business taxes. That this is maybe the light bulb that needed to go off in their head for them. Maybe this is the light bulb that needs to go off in their head for them. Understanding this business taxes, understanding this piece, and you're missing out on giving them that light bulb moment. Okay, so give people the light bulb moment by sharing this live with them so that they can understand their tax obligations, right? So they can understand it, so they can be free. Listen, people are suffering because they don't understand their tax obligations. Help free the people. Help free the people today. Share this live with them, okay? Share this to your page. Share this to your Facebook groups so that people can be free. All right, so I hope you have an amazing Tuesday, and I will see you next week.